This is The Wealth Puzzle with Michael Mansfield from the Lynn Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Michael provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is The Wealth Puzzle with Michael Mansfield.
Hey everybody, thanks for tuning in. This is Mike Mansfield with The Wealth Puzzle. Doing this myself today. Tana is helping her son Owen. He just moved down to Texas right next to her house. They're out office shopping, so it's very exciting for the Lynn Group. We'll be setting up our second formal location out there. So we know we have a number of you that have moved from California out to Texas over the last number of years. And so, hey, we're going to have some boots on the ground there for you to go visit in person. So that'll be awesome. But it's been a very interesting couple of weeks, right? There's been a lot of economic data. There's been a lot of earnings data. The market has been very tumultuous. A few weeks ago, the last video we made it based on, the market was having the most volatile day in 4 years. People were starting to get worried. Is this a correction? Is this a crash? What is happening? We gave some context to what was going on there. And the reality is, over the last couple of weeks since that happened, the market has only ground back to all-time highs. So it got over whatever it was upset about really quickly. Which in part is kind of concerning because we do have some shocking news economically that's been coming out lately. So first and foremost, I was waiting until today to make a video from this week because the whole market has had this anxiety about it. You sit here watching CNBC and the different news channels, and everybody's been like, "Ooh, Nvidia earnings are coming out. What's going to happen?" See, the problem that we have is the stock market. The S&P 500, the 503 companies there, they're not equally represented. Right? The size of the company governs how much weight it has in the stock market. So like in a year like this, where half of the companies in the S&P 500 are either flat or negative for the most part, you can have a company like Nvidia that's up 100, 200, 300%, and it makes it look like the whole stock market is up a ton, which honestly is a bit of a false illusion. Just because a handful of companies are doing really well, does that give a really good breath to the overall economy and this whole tranche of companies? So anyways, everyone's biting their nails. Oh, it's chaos. I had a number of clients I was texting yesterday as the earnings were about to come out after the bell yesterday. What's going to happen? And, it's kind of funny. We all survived. How's that? Nvidia earnings come out. They are in line. They, are at expectation. Everything is in order. It is unclimactic one way or another. Nvidia stock in the moment after ours is trading. I think the lowest I saw it down yesterday, it was down 9%. I think of this morning, it's down 2%. Now, why is it down on fine earnings? And that's because you're dealing with something that you're trying to price to perfection at this point. Without a blowout earnings, without a poor earnings, it's hard to say there's a lot of directionality to the stock. Is it fairly valued at the moment? So the stock market has survived. Everyone was very paranoid on if this would be the next leg for beating up the general stock market. The Dow's up 100 points. The market's up today. So in totality, we survived this very scary moment. It wasn't scary for me. I'm just kind of referencing some of the stuff I was talking to people about yesterday. More interesting, more shocking, more overwhelming. Last week, the Bureau of Labor Statistics comes out and says, hey, we accidentally overestimated all the jobs over the last year. In fact, we overestimated it by 818,000 jobs. There has not been an error this big since 2009. And if anybody can get a time machine and go back to 2009, hey, that's when we were having the worst financial crisis in 100 years. Things were a little messier back then. This is a rather benign year economically, right? So how is it the Bureau of Labor Statistics is so far off? Remember, these are all of the numbers and data points that, the current administration uses to say, oh my gosh, look, the economy is growing. Look at all the jobs being created. Look how well things are going. These are the data points that the Federal Reserve makes when they're doing interest rate adjustments. Hey, the labor market's tighter than we thought. Look at all the jobs that are being created. So all of the sudden last week, the biggest rug gets pulled out from under the labor market. So instead of almost 3 million jobs being created in the last year, we're down to a little over 2.1 million jobs. I mean, it is a shocking adjustment. It's also mysterious timing, right before an election, right before the Federal Reserve is supposed to be making interest rate decisions. So I was very surprised by this. The website I'm on, this is the Budget Committee website for the government. I thought it was an interesting little tidbit I highlighted on here. It's hard to see. It says, with all of this net loss coming from the private sector, that almost tells a worse story, right? Because remember, job creation in the private sector speaks to the health of the economy. If private companies are hiring and things are going well and they're feeling really good, they're hiring. All of these jobs were overestimated in the private sector, which means the majority of the jobs created by the last year by the government. In fact, here it is. I got it right here. In the past year, 82% of all new jobs have been created by the government, healthcare, and education. That's a little terrifying. Growing budget deficits have been holding up the economy, even though the money supply has gone negative. I mean, this is some wild stuff, honestly, when you really get into it. What's interesting about it is then last Friday, President Powell of the Federal Reserve comes out, and it's time for the big chitty chat talk before next month's meeting of where they're going to cut rates or not. And he comes out and he basically, in my opinion, blows off this $818,000 job thing. He blows it off and basically says, no, we've manufactured a soft landing. Life is good. I have lots of confidence. Inflation is coming down. We are happy, happy, wappy, wappy, wappy. From an economic standpoint, the one thing that people want to be aware of is, as we've talked about a lot in the past, money supply governs inflation. So the interest rates will speed up the velocity of money being used or not being used. If things are more expensive, people won't buy cars as quickly. If those car loans are cheaper, they'll start buying them quicker. And then if we expand the money supply and there's no good way to absorb it, then it creates inflation. If we contract it, it brings inflation down. This is the money supply over the last 3 years. So we can see money supply went up a ton. There's all that hyperinflation in 2022. And then the money supply started rolling over. And all of a sudden we got to this point, last year where the inflation data was really low. And then it got kind of temperamental in the first half of the year. So the Feds didn't do anything with rates quite yet. But you can see the money supply has been slowly increasing. Now that's interesting because if the Feds are wrong, now that's if, I mean, you're calling out the idea that the government could be wrong on anything. If the Feds are wrong, like they were wrong in the 70s, like they were wrong in the 50s, like they were wrong in the 20s and 30s. So every other time they've done this, they've been wrong. If they're wrong and they cut too soon and print more money into the money supply, we're looking at further inflation down the road. So it's going to be really interesting to see how this plays out. That's why this is the most magical chart to be watching. What is happening with the money supply? If the money supply starts to accelerate a lot again and not be on its normal curve, we could be in for some rough waters. When we look at where the rate cuts are going at the moment, remember, this is all like pre-election stuff too. This is probably going to juice the market over the next 6, 12, 18 months. At the moment, in the history of me using this tool for probably over 10 years, I have never seen a scenario where there's a 100% probability for a rate change. Normally, there's at least a 0.01 fraction that the rate stays the same. At this point, it is 100% probability that there's either a 25 or 50 basis point rate cut. That's for September. You go to the November, what are we looking at? There's a probability that we're looking at somewhere between a 50 and a 1% rate cut, which is shocking. You go to December, there's a small probability that the rates are in the high threes at 4%. So everybody is really betting hard right now that rates are coming down. Now, this is supported. If you go read the Federal Reserve's SEP report, the Summary of Economic Projections, last time they put it out a few months ago, they were projecting, 5% by the end of this year, 4% by the end of next year, and 3% by the end of the following year. Pretty wild stuff. So anyways, just wanted to give everybody kind of a quick update on some of these things that are really moving around quickly right now. The Fed meeting that matters is on the 18th of September here, so just in a few weeks. So we'll be certainly getting back to you in between then. Next week, I'm going to do a little show on the history of Social Security taxation. I think that that's really interesting because the candidates have been talking about that, and there is a lot of history about it. So anyways, appreciate you guys taking the time to watch the show. If you got any questions, certainly call the office, 805-500-7035. You can visit our main website, thelindgroup.com. Otherwise, I hope everybody has a great day.